how you trade SMC when a market goes sideways is literally going to dictate whether you are profitable or not. So in this video, I'm sharing a very simple 3-step process that's going to help you not only avoid losses when a market gets choppy, but also potentially profit from them if you follow these 3 steps. So if we haven't met yet, my name is Justin Bennett, Forex trader since 2007, full-time since 2011. And as always, all of this is my opinion only and not financial advice. So guys, we're going to talk about when a market goes sideways, what you can do to sidestep that choppy price action, avoid taking unnecessary losses, and even turn it into a profit. Okay, so here we have GBPUSD on the 1-hour time frame. Okay, so this is the current price action, right, for GBPUSD. And what you can see here is that we do have a downtrend on the 1-hour time frame. Now, we've talked about this recently, but you can see that back here, we did have an impulsive move up. Okay, so a lot of displacement through here. And so far, we are getting the pullback. Okay, so this could be just the market giving us that corrective price action before the next leg higher. However, with that said, if you're going to use the 1-hour time frame for structure, which I do, then technically the market is in a downtrend. Okay, we're making lower highs and lower lows. In terms of SMC market structure, you can see that off of these lows back here as well, which yes, for the most part, these were internal. Okay, what I mean by that is that you can see that within this price leg back here, for the most part, all of this right here was internal. We really didn't get a sweep down here into this imbalance, which is exactly why we saw the pound pullback over here. Okay, however, with that said, this right here, this change of character was in fact significant simply because you can see that we got the close below to confirm that change of character. We then had a lower high and a lower low. So anybody not using this right here, not using this low to identify a change of character would have missed out on this short through here. And yes, there was a short opportunity using my SMC strategy, which speaking of my SMC strategy, guys, if you want to get that for free, check out the link somewhere here on this video. It is 100% free. It's going to take you through a 3-part series that's almost 2 hours of content that's going to show you exactly how I trade SMC. So check out that link if you're on desktop, probably right below this video. If you're on mobile, somewhere here on the screen, it's also down there in the description. Okay, so here on the 1-hour time frame, we have lower highs, lower lows. So right now we know that we're only looking for shorts, okay? So we have the change of character back here. Technically speaking, we have now a BOS, okay, off of this low here because we did get that external high developing over here. So we had, just to kind of recap here, we had the close below to give us the confirmed change of character. We then had a lower high develop. This is also textbook here too because you can see internal highs develop through here and then we swept those back here into this imbalance. Then we had a confirmed break of structure, okay? So right now we're only looking for shorts. And what you can see here too is that on this drop, okay, right before this BOS here, okay, so actually let's just plot this out too. Let's make sure that we have this plotted out here correctly to identify our external high or protected high up here as well. So bottom line, as long as we're below this high here, then we are bearish on the 1-hour time frame. Okay, now as far as imbalances go, what you'll notice is that back here, and this is very obvious, is this 2-candle pattern right back here. Okay, so this drop, we saw a little bit of a retrace on this candle, but for the most part, all of this right here is wide open. And by wide open, I mean that we never had a retrace into this area back here. So a lot of displacement on the move down. Okay, we never came back up here and tapped this area. So there is resting liquidity up here. This was inefficient market behavior, and markets will tend to revisit areas like this to quote unquote clean them up or give you that efficient auction. Okay, so this up here would be the area I'd be eyeing for a potential short. Now, furthermore too, you can see that from the high down here to the low, if we take our fibs, this right here is my OTE, optimal trade entry. And you can see where the upper band of this comes in right there in this pocket as well. So again, this is going to be the area I'm watching for a potential change of character. Okay, so let's go ahead and remove this. And I'm going to play this forward now and see what we get here from GBPUSD. So we're still in the 1-hour time frame. As soon as we tap into this area though, I am going to drop down to a 5-minute. Okay, and right here we can see that we are within that pocket, that imbalance back there, that fair value gap, and we're going to draw a level right here off of this high. Okay, so we're just going to walk this up. As the market moves forward, all we're going to do is the same exact thing. Break of structure on the way up, right? This down here now is going to be our protected low. So this one right here now is the low I'm watching. Okay, if we were to get the pound here closing below, giving us acceptance below on the 5-minute, then that could be a short opportunity. Okay, so let's mark this out here and play it forward and see what we get. Okay, now right there, you can see we didn't close above this high up here. So this is still our last BOS. Okay, just going sideways here now. Let's see what we get here from the pound. Okay, still moving sideways. That high is still intact. Remember, this is the external high now up here. So as long as we're below this, this down here, okay, this level right down here is the one to watch. Okay, and right now, this is all still just internal between these two levels. Okay, so playing it forward now, you can see still just chopping around, haven't broken below this yet. And this is the start of when markets start to go a little sideways. Now, right there, you can see that we did get the close below. Okay, so at this point, what I can call this is a 5-minute change of character, okay? Because we had the acceptance below here, so that's a change of character, and now we have the market potentially reversing. Now, I'm gonna go to a 15-minute time frame, look back here, see if I see any obvious imbalances. Not a whole lot back here, okay? Although you do have on the 1-hour time frame, you can see that this candle right back here, even though this isn't technically a fair value gap or it has been mitigated on this high, you can see where this candle up here from this high right here up here to this high, this is essentially a void in the market, okay, a void on the 1-hour time frame. So you could theoretically, right, have a trade on here, put on a limit order up here. So let's move this over. We've mitigated this imbalance now, or at least most of it. And so you could potentially have a short trade that looks like this. Okay, so whether you want to be right above the highs or up here at the highs or in the middle of this candle, you could do something like this with a stop loss just above the highs. Okay, so if that's going to be your limit order, let's set it over here somewhere and call this our limit order that we are looking for the market to potentially tap into here over the coming hours. Okay, now right there, we would have gotten tapped in. Okay, so we're in the trade now. All right, so let's come out here and drag this over just so we can capture any ongoing price action if we do go sideways. And you can see right there, guys, we would have been stopped out. Okay, so here is the dilemma. Now, this is one case where this would not have worked out. You can see we did get a lower time frame. This was a change of character on the 5-minute. You can't see it here on the 1-hour, but this was a confirmed change of character on the 5-minute. Now, the one caveat to this, though, is that you can see again on the 1-hour time frame, this candle back here is that void I mentioned. Okay, so you can see right here and right here. Now we tapped into this lower portion through this price action. However, this high up here gave us that full mitigation of this candle back here, this upper candle. Okay, now in hindsight, right, it's easy to see that, but in real time, this right here would have been perfectly valid to look for shorts, and this right here would have stopped you out. So let's talk now about how to avoid this and how to actually profit from this. So what most traders end up doing is they look at this here, okay, they get stopped out and immediately they are on the same exact time frame, on the 5-minute time frame, looking for another opportunity to make their money back. Okay. Now, this is a mistake for two very important reasons. First of all, they're trying to trade immediately following a loss. That is the worst thing you can do as a trader. Okay. The worst thing that you can do is trade when you are emotionally compromised. You just took a loss. Okay. You're emotionally compromised. You're not thinking straight. The market hasn't even set up a new opportunity yet, and you're already hunting for the next thing. And if you're out there looking for a setup, that is the worst place to be because you want to be waiting for markets or for setups to come to you, not hunting for them. Okay, so let's remove this here and talk through this. Now, the 3-step process to avoid this situation and to really control yourself through choppy markets. And if you took this loss here, okay, so what? You're going to take losses as a trader. But the one thing that you can't do is allow yourself to be emotionally compromised, get into a situation where you're taking 2, 3, 4, 5 losses in a choppy market. Next thing you know, you're starting the next week 10% down. Okay. That is unforgiving. So here's what you need to do. Step 1. Okay. And this is how I handle it. It's not exactly how you have to handle it, but this is what I do. Okay. So step 1 is going to be to take a break. Okay, now it's funny. We have a 2.5-year-old, my wife and I, and we often tell him take a break. That's his timeout, right? He'll even sometimes put himself in timeout. Really good kid. But this is your version of your timeout. Okay, even if you didn't do something wrong, like this back here was a valid setup. But if you get stopped out, you've got to take a break. You've got to take a break for at least, in my opinion, 24 hours. Okay. Now, if you're a scalper, trading 10 times a day or whatever it might be, then maybe you take a break for an hour. Okay. And come back. But for me on the 1-hour time frame, when I'm swing trading the 1-hour time frame, if I take a loss, especially in choppy conditions like this, I am taking at least 24 hours off. Okay. Because I know I might not be thinking straight and I don't want to take another trade and just get myself into the same exact position. So step number 1 is going to be to take a break. Okay. So we're going to call that step 1. Now, the very second step, okay, and this is also incredibly important, is to do something different. And by different, what I mean is if you took a loss on a 5-minute time frame, do not sit here on a 5-minute time frame and continue to look for setups. Okay, because you just took a loss, markets are sideways. If you stay on the 5-minute time frame, even if you take a break and you come back to it, you're doing the exact same thing again. Okay, you're repeating the same exact mistake over and over again. So literally you're doing the same thing and expecting a different result. So what I do here is step number 2 is to move up a time frame. Now, on the 5-minute time frame, I could go to a 15-minute chart, okay? However, for me, this right here, I'm going to specify this and call it a 1-hour chart, okay? So for me, the way this looks is if I take a loss on a 5-minute or a 15-minute time frame, I am immediately going to the 1-hour time frame, okay? So step one is to take a break, get out of the markets for 24 hours, go do something else, don't think about markets, don't open charts, and come back 24 hours later to a 1-hour time frame, because this is going to give you clarity. It's going to do two things for you. First of all, it's going to give you clarity, because the thing to understand about time frames is that the higher the time frame, the more conviction you're going to have behind each candle. So think about it like this. If every trade in the market is a vote, okay, because every time you trade, if you buy a market, you're voting that you think the market's going to go higher. If you sell a market, you're voting that you think the market's going to move lower. So within every candle, there's a certain number of trades or votes. And the more votes you have within a candle, the more conviction there is behind each candle, okay? So when you think about it like that, I know that a 1-hour close, a 1-hour structure is going to have a lot more significance than a 5-minute. So armed with that knowledge, guys, what I'm going to do is I'm going to get rid of this here, and I'm going to go to the 1-hour time frame. Okay, I've taken my break, I've come back to the market, and what do I see here? What I see is the market giving me this right here. Okay, so the close above this high back here. So this right here is a break of structure. Okay, even though we got this reversal, we did close above this high back here. That is a valid BOS on this uptrend. Okay, so technically you had a close above this high back here. Okay, so again, this is all part of this relief rally within a larger downtrend. Okay, so we had the BOS above the high, we had the close below this low over here. Okay, so if we play this forward now from this low right here, you can see we haven't quite closed below it yet, but let's play this forward and see what we get. Okay, so we bounce around there, we close below it right here. So now we have a change of character, only this time. Okay, very similar pattern to what we had on the 5-minute, only this time we are on a 1-hour time frame. That means each of these candles holds more conviction than the 5-minute time frame. Okay, this close right here does, and this close right here does, and ultimately this entire structure holds more weight than what we had on the 5-minute. Now I'm going to change this down here to a change of character because that's what it should be. Okay, now what we can see here too is we can see that this up here is another slight imbalance above these highs. Now you can see here too though, where technically, okay, we had the close below or right here on this candle, we then moved up. Okay, we had this high. Now this is a very slight area. However, with that said, this is also real-time price action. So in Discord just last week, I was talking about this area here on the pound. You can see 1-hour change of character confirmed, exact same setup that we're looking at now. I pointed this out as an imbalance, as a potential area to look for shorts. Okay, and the thing is, I wanted to see these highs back here swept into this very slight imbalance that we had here. And what you'll notice is that over the next few hours, we did get just that. Okay, so we had the pound coming up here, tapping into this area here. I was also adding to my short position, which I also announced in Discord right here. Okay, so you can see that this was also called out last week, added to my short here on this retest. Okay, so I call out all of my trades in real time, also setups in real time in Discord as well for VIP members. All right, so we had the tap into this area right here on this candle. Okay, so just barely swept this high back here, but that was enough to give us that move into the imbalance. Okay, so right now, guys, what we've done here is, and remember, we took the loss back here on the 5-minute. So what we've done is on step one, we took 24 hours off, right? We took a break. You can make it whatever time you want. If it's 6 hours, that's fine. If it's 3 hours, it's fine. If it's 24 hours, that's also, great too. So step two is to move up a time frame. So if you're on the 5-minute or 15-minute time frame, go to the 1-hour. Personally, if I'm on the 5-minute even, I will go to the 1-hour time frame, because this is the time frame I use for structure. And look, here's the deal. I know that I took this loss back here, okay, because the market was going sideways. So I'm not going to sit here on the 5-minute time frame and get chopped up and take, 2, 3, 4, 5 losses. But that's what a lot of traders do, right? And again, that is unforgiving. That is the one thing that you cannot afford to do, okay? So the very first thing is take a break, get your mental state back, and then once you do come back to a 1-hour time frame, this is going to give you more clarity. It's also going to slow down your trading, right? The 1-hour time frame is going to force you to slow things down so that you're not trading right away after a loss and just taking loss after loss in a sideways market. Okay, so let's go ahead and play this forward now, guys. And once I get done with this too, we are going to run through actually what's happening right now with the pound, and then I will give you my outlook on this market. Okay, so step three, just to wrap up this strategy here for avoiding losses in a sideways market and even profiting from them as well. Step 3 is going to be to watch for a change of character, okay? So the same exact thing that we did back here. Again, the only difference is that we're looking at the 1 hour time frame. It's going to slow your trading down. It's going to force you to slow things down, be a little bit more conservative with your entries, and it's also going to give you more conviction, okay? Because liquidity equals conviction. There's more liquidity behind a 1 hour time frame than a 5-minute. And so, you get the idea, right? The higher time frames are just going to give you a lot more conviction behind those closes and the structure that you get from them. Okay, so let's go ahead now and turn this off, guys, because this is real-time price action. Now, things remain slow for this market, okay? But what this is going to come down to is this structure that we've had right here on the 1 hour time frame. Okay, so you can see that so far, since these highs back here, we did get the BOS, the change of character on this price leg. So technically speaking, we have a downtrend. Now, the thing to remember here, and again, this is where a lot of traders go wrong, is they look back here and they see this move right here. And they say, okay, well, from this low down here up here to the high, you can see where this is OTE, the market tapped into this. We have this impulsive move. This is all corrective, and this is a buy. And that might be the case, okay? It could be the case. However, we have to go with what is on the chart. And what's on the chart right now is, yes, we do have the market tapping into OTE down here. But in terms of this 1 hour downtrend, this trend right here, we have not broken this because this high right here is still intact. And since this structure shift that we got last week, all of this right here is also intact. We have not taken out any highs here. Okay, so technically, when you look at this market from a market structure standpoint, from an SMC standpoint, this market right here, GBPUSD, is technically bearish. So we can't sit here, I can't sit here and look at this as a buy and say it's bullish because we haven't shown anything here on the chart that makes me think we are bullish. And I have to trade what is on the chart, not what I think might happen or what I want to happen. Okay, and that's very, very important, right? Trading is a reaction business. Everybody talks about it being bad that you're reacting to the chart. That's not bad at all. That's what you want to do. You don't want to be forecasting or predicting markets. If you're sitting there forecasting markets and drawing arrows on what's going to happen next, then you're going to get yourself into trouble. No self-respecting trader out there that trades full time, that is profitable, is drawing arrows and saying, here's what's going to happen next, because nobody knows what's going to happen next. Now, in terms of that, okay, let's talk this through. As far as how we identify if we are going to get a move back up here towards some of these highs and this downtrend here is going to shift, or if we're going to get a continuation. So from last week here on the 1 hour time frame, we're going to stay on this time frame here, and you can see that from this low right down here. Okay, so this is our new low here, that if we were to get a close below, okay, acceptance below again, that would be another BOS. Okay, so within this move lower, we now have a BOS down here. If we get acceptance below here, and then you're looking for shorts against any imbalances. So same exact thing, just a continuation of this downtrend. Now, as far as what could reverse this trend, okay, so let's look at these lows right through here. So off of this low, and really, you could even use this one over here. It's the same exact thing because we never got acceptance below until this point right here. Okay, so if you'll notice what we had here is we had acceptance below on these two candles last week. So what that means is that this high up here, even though all of this right now is really just internal, right? And what I mean by internal is that you can see we've got the low down here, we've got the high up here. So all of this right here is just internal to that. However, if we are going to get a bullish reversal, I'm not saying that we will, but if we do get it, then this high right up here, okay, is going to be the one to watch this week. Okay, so right here around 136.72 or so. All right, so this high up here is going to be the one to watch. So two things here. In my opinion, we either get the close above here, the acceptance above here, in which case this internal trend could start to shift back here toward this high. Okay, get above this high, and all of a sudden now we're looking at a more bullish pound back here toward some of these imbalances, specifically this area back here. Okay, so in other words, get above here, acceptance above this, we're targeting these highs, maybe this one back here, get above this high, we're targeting this area back here. Now, alternatively, if we just continue lower, because remember, there's nothing bullish on this chart right now. If we just continue lower here, give another acceptance below here, we just have a continuation of this downtrend. Okay, and this kind of slow bleed lower. So if we get acceptance below here, then again, looking for shorts against any imbalances to play this trend, okay, back here toward the lows. So, I mean, that's really it. And right now, right, in terms of what we get here within this price action, if you missed this short last week, which again, we talked about this in Discord, But if you miss things like this here, right, where we had the break below, we had the move up here to sweep this area, highs like this, even in my opinion, are a little bit, I'm not going to say risky, but they're less than ideal simply because, again, the market is very sideways. But in terms of all this right here, okay, between this high up here and this low down here, this right here is the time to do nothing. Now, what you will see is that we had the BOS down here, we had imbalance back here. Okay, so same exact thing. We came up, took out this imbalance, mitigation here, and we're continuing lower. But I really think that for this week, though, if you want to stay conservative here with the low volatility conditions that we're in right now, then this is the area, this is the no trade area right now for the pound between these two levels. If we get acceptance above here, now we potentially have something to act on. If we get it below here, we also have something to act on. Just remember though, if you get a BOS or change of character, that is not the trade. That is not the trade setup. I've talked about all this before. That is just your signal that either buyers or sellers are taking over and to start watching for that next trade setup. But the actual break itself is not the trade setup. Okay. So that's it for today's video. I hope that this helped you to avoid choppy market conditions and even turn them into profits. So if this video helped you, then you're going to love this one right here because I walk you through my very simple process for trading liquidity sweep reversals. And this one is an eye opener. So I encourage you to go check it out. Trade well out there, and I will talk to you again tomorrow.